Hello, this is the Trade Tight U.S. Stocks and Futures and Forex Market Preview for the week beginning Sunday, the 20th of February 2022, ending Friday the 25th. Now, let's be clear, Monday's a holiday, so the U.S. stock markets and banks are closed, so we can't really identify whether or not, it's a 4-day week at the end of the day, so it's not a full week. But we won't be making Forex calls for Sunday night. The levels are posted, but we'll get back to work on Tuesday. And again, we won't be dealing with the futures until then, although those levels are already posted. All right, let's start with the Forex side. Here's the dollar index daily chart. And as you can see, we bounced off that static trend line after the 13 sell signal. So that's exactly what you want to see from that signal. But this was kind of a flat week and there's really not much there. So we'll go through the couple of the pairs real quick. It doesn't really matter. Forex is not that exciting right now. Euro dollar, also the inverse of the dollar index, was flat. Pound dollar, mostly flat as well. We had a couple of days of upward movement, but that's about it. And the Aussie dollar, look, again, that 13 buy signal, it's a decent move in the Aussie. I mean, you could retire off of that little move if you put your life savings into it, but you got to believe in it, and it did work. So it is what it is. In terms of the intra-week action on the euro dollar, here's that. We've got high to low for the week is only 120, not even 120 pips. So that's really, really poor action. And then if we look at the pound dollar, high to low for the week is, we'll call it 160 pips, which is also poor. The average daily range on the pound dollar, that's per day, over the years is more like 130 pips. So to trade 160 pips for the whole week is not really a tradable environment the way that we like to look at it. So Forex, it just continues to be dead. Here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures form. Nothing pretty here. We continue to roll over. Obviously, the situation in the Ukraine is affecting the market. Plus, we have the whole situation with the Fed and the likely rate hikes and maybe an intermeeting rate hike and everything else that's coming. And we knew this, and we got up to the downtrend line and then failed. And this is what downtrends begin to look like, right? And so what's it really going to be? If we undercut 4,200 on the ES, then we're in trouble. So let's look at the daily charts of the cash indices. The S&P cash lost, again, that 13 sell signal back at the start of the year, but has lost 31 points on Friday. Same thing, right? Got to get under about that 4,200 level. Nasdaq, though, down 162.19. And again, this thing's even weaker, right? This is horrible. I mean, from 16,600 to 14,000 in just a couple months. But again, the tech stocks get hurt more by the rising interest rate environment, as should housing in theory, although there's a housing glut. There's not enough supply. But the tech stocks are definitely getting hurt by it, and that's what's going on here. So if we undercut the lows here, that's ugly. This is what, 1987 crash looked like this to start with. I'm just saying, same story. SOX down 38.30. Nothing pretty there. The biotech's down 48.22, approaching the lows again. The Russell 2000 down 18.75. Again, this was so flat last year. That part of what makes the market untradeable, or hard to trade anyways, was that we had a good week this week, by the way. We had a couple of great trades from Rich on Thursday and Friday when the market was falling apart. So we're doing our stuff, but I still would like to see the meltdown. Crude oil down 10 cents to 91.66. So, even with the Ukraine situation, and we know that if things go awry there and Russia steps in and starts to invade, there's going to be some issues with oil and prices are going to rise. And we know that. But so far, the market's not as concerned about it. I mean, there's been ever since we saw Russia starting to step forward there back in January, there's been a general rise in the price of oil, but it's not ridiculous. But, we'll see what the reaction is once they start to invade. And if it does break us over 100 and more, that would be very, very negative for the market, because the last time that happened was the top in 2008, and that wasn't pretty. Here's gold, and look, what a nice cut base. You talk about great patterns. Buy gold, right? Gold has been the thing that didn't move. Everybody's worried about inflation. Usually that takes gold higher. Gold has not moved on that, but it is moving on this latest Ukraine situation, right? So it's not about the inflation. I don't believe, and I still continue to believe, that the inflation thing is not as big of a deal as some people are making it. I think it's more temporary, given the supply issues and the amount of ships that are out at sea. We won't even talk about the boat that's in the Atlantic that's burning, that has like 4,000 Porsches in it, but that's, you know, rich people problem. But the war thing is a big deal, and that's why gold basically told you, in my opinion, along the way, that inflation isn't a big priority of the market yet, but now it's starting to see it as a problem, I think, because of what's going on in the Ukraine. Advance decline ratio on the Nasdaq, negative 1403. So it was a negative number, and you know, we've had some mixes there, some very positive days, some very negative days. Again, this is a very news-driven market right now with the interest rate situation and Ukraine. Negative 711 on the New York, so, you know, not pretty either. 4.3 or 4.4 billion shares on the Nasdaq. A little bit of an uptick from the last couple of days, which has been horrible. Like, the whole market's just waiting to see what this Ukraine thing does. But what you realize is that usually options expiration Fridays have a big spike in volume. And so to go from 4.2 to 4.4 billion, 4.2 or 4.3 most of the week, and then 4.4 for options expiration, that's not a big spike, right? So it was a bust of an options expiration, is what I would say. The trend closes at 1.28, puts the 10-day back at 1.0, but just keep in mind, really what we're still operating on is the dual sell signals when the 10-day moving average got under 0.85, both in January and now. So that does not look pretty, and if you understand those, you should be worried about the upside of the market at all. Like, I'd be meaning I think the downside's in place. VIX up down 36 cents by the end of the day, because we did kind of rally late in the day, but it did kind of move back up a bit for a certain point in time. Apple, let's look at the individual big stocks. That's not pretty, down $1.58. I'm about to break the lows of the last month. Amazon down 41.02, which is fine. Facebook down $1.55. That's a blip, although it's still ugly. Google down 42.72. Remember, this is a stock that's splitting, right? Usually the stocks that split go up, but the pressure right now with the interest rate situation is bad. Goldman Sachs down 3.02. Not at lows, but, you know, near it again. Netflix up $4.62. That's a blip, kind of a 1% blip on Netflix. Peloton down 96 cents. Nobody cares. TLT, the 20-year bond ETF, up $1.44. So that means rates actually have come back a little bit after really getting smacked recently. Tesla down 19.37. Nothing there looks good there. I mean, we're back to October levels. Zoom down $2.42. All right. Bitcoin sits now under 40,000. Put the daily chart here, back under 40,000. So again, let's watch that. The and the Dow was down 292 points. So that's basically your week in a nutshell. Now, we'll look at the intra-week action, and we'll go to the 10-minute chart so we can see the whole week. And what we get is from last Friday is a flat opening on Monday, kind of wiggled both ways, closed very slightly lower. Tuesday, gap up and dead flat, just dead flat. Wednesday, kind of a flat opening, a little gap downish, and then flat, and then, you know, the Fed, and then boom, we gap up. But then Thursday, gap down and just get crushed as the Ukraine situation starts to unfold. Friday, kind of a flat opening, and, you know, whatever. We left a gap above for the week. It is what it is, but I don't think there's anything exciting. What's the net for the week? We lost about 50 points on the S&P, and if you look at the Nasdaq side, the net for the week is that we lost 250 points, just over 200 points. So that is it. In terms of, now keep in mind, again, Monday is a holiday. This is the problem right now with the Ukraine situation. We've got the Olympics ending. Some people felt like Putin would wait until after the Olympics to do anything. And now we have the Olympics ending, and then maybe that, so that was always kind of the timing that we looked at, which means maybe Sunday, Monday. Now you got a 3-day weekend with no options, less options protection than usual because of options expiration. So if he does do something crazy and it goes out of control, we have until Tuesday before the markets can do anything, and that's not a positive. The markets don't like that. Here's the data, and I'm just going to scroll through most of this. Like I said, the U.S. is on a bank holiday. You've got a lot of manufacturing and services PMI numbers out of Europe on Monday. Tuesday, we've got the housing price index here in the U.S., flash services and manufacturing PMI numbers, consumer confidence, Richmond manufacturing index. Got a re-announcement out of New Zealand. That's not going to change the world. CPI out of Europe, not going to change the world. We're already at Thursday. We've almost had no data out of the U.S. We got the weekly initial and continuing jobless claims numbers, preliminary GDP, our new home sales, our natty gas, our crude oil that gets bumped from Wednesday to Thursday because of the short week, right? So it's just all packed into Thursday, and none of it's that interesting. Friday, a couple more European numbers, and then here in the U.S. on Friday, PCE price index, durable goods, personal income and spending, revised University of Michigan sentiment. None of these really are market shaking deals. What's really going to be the market issue is what? It's going to be what the Fed does if they do anything early before the March meeting, and what happens in the Ukraine. So it's news driven. Let's go for it. Charts as usual brought to you by eSignal. If you've not yet taken the trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great long weekend and a great trading week.